All right, we are up and running. Sorry about that. We started streaming it to the wrong place. So we could have thought we were all going and no one would have seen it. So apologies for that. That's why we're a bit later. Right, thanks for the question, Jason. I'll answer that one. I don't think there are any others further up. I haven't watched that YouTube video that was posted up, but probably worth a little look. That's from you, Peter. I'll have a little look at that at some point. Probably on the train home.
It's a good train.
Yeah, okay, well, I'll give an opinion on it tomorrow. Right, as I said at the beginning, if you do have questions, fire them in the group. I can cover any of them off in these sessions. We're also going to have a look at what is currently going on and how that relates to what we've currently been doing. So, first question Jason sent, thanks for that one, was when it comes to charts, trend lines, patterns, or even profile, are you looking at cash hours or outside of cash hours, basically? The way I kind of try and look at it is what I would call an indicative trend line versus a trend that you're actually going to execute off. So I'm quite a big fan of having a full session chart. This is S&P, a full session chart, and then a shorter time frame cash hours chart or cash with full session on it. So what I've got here is the same chart. This one's full and this one's cash. The reason I like the full session one is you've just got that little bit more information on it. It also means that what you're going to end up with is differing lines if you look at them slightly differently. If you only look at cash, quite possibly you're going to miss something, which does run yourself a little bit of a risk. So if you take these two trends, this one breaks at 63 1/4, this one breaks at 60. On the upside, it's 93 3/4. On the upside, it's 02 3/4. If you're going to try and differentiate, then I think what you're almost better to do is look at it from the point of view of which one's the lowest or highest. So that if, let's say, you play the break of this trend here, which is the full session one, the equivalent break when you look at the cash is 3 ticks lower. So actually the break you might want to be trading is the break of the lower one, because at that point you can go, well, if anyone was thinking that they're still going to buy the trend, they're running out of trends to buy. That's kind of the way that I try and look at it. Same with the one on the upside. That would be the sort of distinction, but generally on a sort of a trend like this, being it an hourly chart, I'm not really going to be trading off the hourly chart anyway, at least not pinpoint accuracy on a trend break. There's going to be certain circumstances you might, things like breaks of significant highs and lows, stuff like that, then yes, they're worth a look. You know, if you take out this high, it doesn't matter what chart you put that on, an hourly, a 5 minute, or 1 minute, that high is the same high. So the break of that you could play, pinpoint, break the level. A trend drawn on an hourly, if someone puts this onto a half-hour chart, because it widens the chart, it could slightly shift the angle, and that number is then 62 3/4, not 63 1/4. So you always end up with this situation with trend lines where it depends on who draws it that influences it, depends on whether someone draws it off this low through this low, and it might slightly adjust it. You'll get some people drawing it like that as well and looking at it that way. So with trends, I prefer on a longer time frame to just look at them purely as an indication. If we break out of this sort of pennant, you can at least go, okay, well maybe I should be looking towards the upside. I'd be much more interested in this low, because at that point you're through the trend and you're through the low, and it doesn't matter again what time frame and who you are, that is the low of yesterday no matter how you look at it. So at least for anybody who, let's say, is buying the trend, they've probably got their stop below the low. So in that case, you can go, well, you're running out of reasons for people to buy if you get down through that low. So in general, I don't use trends to actually execute off. It's more just a sort of indication. You know, you draw a pennant, it indicates to you the market's compressing, or it provides just sort of a more visual cap on what's going on. With cash markets, rather than or just looking at cash sessions, rather than looking full session, what I'm interested in is the gaps. So things like this, where you've got this gap up here, gap here. We had the gap down yesterday, and we'll talk about gaps a little bit when we do profile. There's two elements to a gap, and it will come up a little bit during the week anyway. With a gap, you've got what I call a price gap, which is where there is a distinct difference between the highest price of the previous day and where you open, i.e. it opens completely outside the previous day's range. With others, let's say the one from yesterday, that's what I call a close gap, whereby you're gapping away from the close of the previous day, but you're still within that previous day's range. So you're inside range, but there's still a gap. That generally is almost inevitable on a cash session. There's very few times that you will actually open bang on the previous day's close. So there's a fair few stats out there about these. I can't remember the exact number, but something around about the 85% of the time, if the S&P opens with a gap but inside of the previous day's range, it will close the gap. That sounds wonderful, apart from the times where it doesn't do it. And the reason that a statistic like that works is very often it opens 3 ticks away, and it goes tick, 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 and it doesn't. It's the ones that it opens, say here, where it looks really attractive to play for the gap close, and it doesn't, and it does that. And then you're in massive trouble, because how far is it going to go before you go, this is probably one of the 15%. That's why I'm not a big fan of stats on stuff like that. Stats are a lot more complex than, if this happens a certain percentage of the time. Yeah, it might happen, but you've got to look at the times when that doesn't really work out. Right, so I'm always quite interested in gaps, and with the gaps it's a case of trying to work out whether you think they're going to close or whether you think the gap leads to a further continuation, i.e. this one here, are you looking at that for a gap and a continuation versus this one up here, which is still a gap out of range that reverses, and what's the reason for each of those? As a general rule, anything news-based, you're probably going to see continuation on, or I'm generally looking for continuation. Anything that's just a overnight move, I'm looking for a reversal of. Oil today is a pretty reasonably good example of that. So to illustrate what I'm talking about there, what I've then got, and this is the way I like to have it done, you'd have to manually draw it on Tradeovate, unfortunately. I'm not sure, well, actually you could do it on your profiles on Tradeovate, and you could add another session. So set a pre-cash and then a cash session, or a ETH, RTH as the Americans call it. Regular trading and extra trading hours, extended. That's why I have it set on my charts, so that what I'm doing is distinguishing the cash sessions, which are the thinner ones, and then the overnight sessions. I'll talk about it more next week, but a trade I'm always really, really interested in, and I've started to notice this happens quite a lot on soybeans, interestingly, is where you get a very directional overnight move, which creates a gap, obviously. If you've closed up here, you trade down here, you've then got a gap. The idea of this is, well, these people, as you can see, there's not a great deal of volume in this. It's easy as a shorter time frame participant to drive a market when the market is closed, or when the main market is closed. If they don't get what they want, i.e. a gap and a continuation down, they'll give up. Equally, anybody who was thinking about buying it, when they don't see follow through of sellers, can then go, okay, this looks like a good buy, and back up it goes and fills the gap. So they're the types of things that I'm interested in. It's the how has the gap been made type of situation, particularly something like this, where there's clearly no sort of moment that drove the gap and created it. This is more just, I would view, a just technical move. People have sold it in the overnight, it's not kept going, it then reverses. You've seen something similar to that in oil today as well. I'll just ping it up for you. Oops, where's it gone? So that's then, the way I've got the oil one set is that's cash session, post cash, so until the end of the Globex day. Globex is full CME session. So that's 7:30 till 10, and then this is post that. And again, it's just this drift. So whenever I'm getting this type of thing, what I'm interested in is whether we can then start to try and reverse it. If you're opening within the previous day's range, my target on something like that is going to be the previous day's close. You obviously look at levels along the way. I'm not going to get here, see it struggle and go, well, I'm not getting out, it's got to go there. If it gets to 71.20 and it sticks and it looks like it's struggling, fair enough, or you could at least cover something. But the sort of wider target is to get all the way out to the previous close. That's why I would have a full session chart, just so you can distinguish those two and you can understand, particularly with markets that have a very distinct sort of cash session. If you look at, say, oil, it is very, very obvious. If you look at the average volume, don't look at that was a spike, that was the breakout yesterday. Take that away, you get a very distinct jump in average volume at 2 and even more distinct jump at 7:30. That marks the beginning and the end of the cash session. Yes, volume tapers off into the end of the session. You're looking for that very distinct spike. It's easy to see, if you look on a 1 minute, you can see there's this sort of very obvious sort of jump at each end of the session. Just where lots and lots of orders get entered. So that's how I'm looking at it from an overnight / cash session. And in terms of actually playing a trade like this, the way that I'd look to try and play it, and again, we'll come on to this in a bit more detail next week, the way that I'd look to play a trade like that, this one's not open at the low of the overnight. That would have been the ideal, that it opens down there. Doesn't. What it did do, in terms of the way you play it, opens, trades down, you buy it on the move through the open with your stop below the short-term low. That happens to coincide with that level that I mentioned around 40 as well. So it's very, very similar to yesterday, where from a profile perspective, it's almost a mirror image. Well, not a mirror image, matching. If you look at it from a open, test, drive, next bit, if you can get into the side of value from yesterday, I'm not going to go into profiles too much, then I'm looking for it to just drive straight the way up. So 71.20 is the level that you're interested in now. Oh, which brings me on to a couple of other things I was going to talk about anyway, related to oil and different sort of technical stuff, since that was some of the main stuff that you're looking at this week. One of the things is the reason for having differing time frame of charts. And again, I'm not likely to execute off a longer time frame chart, but it's there to give yourself an indication, some context and bias, right? So if you take euro, well, it is, in hindsight, it's really easy. Oh, look, it's a double top. Yeah, it's pretty easy to discover that. What you don't want to be doing on a double top generally is trying to sell it up here. What I'm looking at a daily chart for is I'm not selling this on the break here and going, yes, it's going to fall out of the sky. I'm done now. I just walk away for a week and let it go. There's a lot of things that could go on that could change that perspective. Short-term trader, it's not really worth it. I'm not a big fan for measured targets either. I think you put yourself into a dangerous situation of going, well, it must go there. You're like, well, yes, theoretically, but theory's not the same in practice. I look at it more from the point of view, if you've broken there, where would somebody buy it? If they're not looking at this as a head and shoulders or a double top actually as it is, if they're not looking at that and they're going, I want to buy euro, where are they going to buy it? Well, probably somewhere here, and if not, somewhere down here. So I'm not going to sort of measure it and go, oh, look at that, it matches up perfectly. You kind of eyeball it, you can sort of go, yeah, that's roughly about the same. That looks like a reasonable target. This one would then be my point where you've got to make a decision on a move down. And again, that's not implying that you're in from here, holding it and making a decision over these 2 days. That's just implying when it gets there, don't go assuming that this is just going to keep on dropping out of the sky. So it gives you that little bit of context to go, okay, we're now at a point where this could get a little bit sticky. Equally, once you've got down to here, you look at that and you go, well, that's as far as I think it's going to go. I think the last bit of this move here, I wouldn't want to be on that. As much as you go, well, why wouldn't you want to be on it? It's dropped 200 ticks. Of course you do. 100. Of course you want to be on it. I don't really have a great deal of reason to want to be on that trade. I think you're getting into the realms of it's gone a bit too far, and I hate that phrase. But what more reason have you got to keep selling it down here? If you can look at this and go, right, we've reached a target. You've achieved the move that you could reasonably expect to happen. Why should you expect anything more? Unless you've got a different reason to be in that, I don't think you can maintain the bias that you had based off the bigger picture. From a bigger picture point of view, as soon as it's gone through there, which is 1047, or 11047, my view is it's going down. It makes your life easy, because now every day your job is basically to ask yourself, can I sell this? And find somewhere to sell it, some way to get short, looking for a move down. Not every day is going to go down, but you're more likely to get paid trying to be short than you are to be long, until it gets down here. At which point I can then kind of go back to what I call neutral and just go, I don't know. I don't need to know. If I don't know where it's going, that's fine. I can leave it alone and worry about something else that I'm more confident where it's going. So if you take that onto an hourly, what it does and what it helps you with, this is a good example of one where you could try and be quite accurate on a very significant level. That 1047 is there. I would very much expect people to lose money here. I think it's quite a reasonable one to try and sell the break of the big daily level. If it goes first time, it's going to do something like that. And if you don't go for it first time, it's done it. And you've just missed probably the biggest straight move that you're going to see for weeks, or well, try and find another better example that isn't a piece of data. You're going to struggle to find it. So you have to go for it. It doesn't work, but that doesn't mean that you don't try and play it again on the second break. So what you don't want to do is get put off by the fact that it doesn't work the first time. Yes, it could bounce from there, but I don't really know why you'd really fancy buying that. To me, it just looks like a more attractive sell. If it is going to bounce from there, remember this is a bigger daily trade. It's not going to do that. It's going to do something like this, and eventually it might go up. You could be in it for days before it goes up. So even if you buy the level, it's unlikely to just suddenly pay you. Whereas the break is likely to, because it's going to be the point where anybody who was long from a daily perspective quite possibly does start to give up. And also anybody like you who's short term looking at that bigger daily chart goes, this is the chance I need to get in now, and gets that move, which is part of that big rush towards the downside. It's just everyone piling in. So that's the kind of thing you want. What also you've got then is once that's happened, if you had any wondering about what you want to be doing, you want to be short from there. So you've got things like this. Now, this is one of those good examples of where you can call that a flag if you want, you can call it whatever you want. The objective is, does it give you a way of getting short? Does it give you something to go, yeah, I could sell this? I'm not the biggest fan of flags and sort of technical breaks, particularly on longer time frames. But I'd be looking at this thinking, well, somewhere down here I want to be short. Personally, I'd more be just looking at the previous low and trying to get short as it breaks out or as it closes below it, rather than trying to play that flag and the break from there. Equally though, you're then looking at it in steps down. Once it's broke, it's just a straightforward support becomes resistance, and you try and sell it again. From a day-to-day perspective, yeah, I'm not looking at that thinking, right, I'm going to be short, I'm going to hold it, hold it, hold it. Realistically, I don't think you're making any money there. That's probably the best part of 7 or 8 hours, just chopping across the level. So you might try and do it. You might realize it's not going and get a little bit out of the trade, but you're not going to get the big move out of it. It's something like this point here, which is a piece of data just based on the way it's a very big hourly candle. But you're going to look at that with the view that anything that flicks you back, anything that flicks you back to this level is a good chance to sell. They're going to be the ones that you will get paid for, and they're going to be the ones that do give you a decent move. Same again here, you can then just keep on repeating that type of process. Every time it goes back to that level, you sell it. Every time that it sets up any kind of short time frame continuation pattern, you go for it. I wouldn't want to play any kind of reversal looking patterns. Struggling to see anything that looks overly reversally in there, which is always helpful, but that's the way I'm trying to look at it. I don't want to get involved in any of that. Just look for continuation, just look for reasons to sell. Once it reaches the target, which was down here, it went slightly through it by about 6 ticks. The fact that it's done it very fast, I'm saying very fast just based on the size of those candles, whoops. The fact that it does it quick, perfect reason to get out. It's a really good thing to keep in your mind. One, to not get sucked into. It's really easy to get sucked into. If a market moves very quickly to where you think it's going to go, get out. It's not an indication it's going to go further. It's an indication that people have just panicked or they've rushed to do something. There's not going to be people who can keep on panicking and panicking and panicking and keeping that move going. So that, because the way it gets there is a perfect place to get out. I'd say it's even a reasonable place for a bounce. You know, if you go back to the whole, where would someone want to buy it? That seems quite reasonable. If it gets there quick, the viability of buying that increases because it's gone to the level quickly. If it's done it in this sort of slow, steady dribble down, you know, something like it had done there, then I wouldn't fancy it. But the fact that it's come from fair distance away and done it quick makes it a decent buy. That trend, incidentally, was drawn on after, so that's not to say, oh yeah, it also bounced off the trend. That was drawn after. But this is the kind of thing like with a trend line as well. I'm using that as an indication. Yeah, you could argue it has slightly broken it. It's not perfectly drawn anymore here. It's more an indication. If you can get through the trend, and more importantly, back above that 0837, then I think things change. Then the bias switches and you start thinking, okay, well, we've had this steady grind down. This is like your descending wedge type trade. We can go back up. That's the way I kind of try and sort of think that one forward. So there's a lot of times where I will have points where I'm thinking, I don't know. I don't really know what I want to do here. More to the point, actually, I do know what I want to do. I want to buy it. The reason for that thinking is I'm not convinced how much further it's going to go. It's clearly going down. I don't want to buy it down here, but by keeping that mentality of I want to buy it, I save myself from trying to sell it as it's going down. When you're basically selling it at the low of an already enormous move, that's the last place you want to sell. Yes, it's an hourly, so it's slightly different, but I know from a fair few times, personal experience of watching this type of pattern on like a 5-minute chart and thinking, go on, sell it, do it. And then you go, no, that's not a good place to sell. And it keeps going. And you're like, yeah, you should sell it. And it keeps going. And the further and further it goes, you get to a point, you're like, fine, sell it. And it's almost always the low. And so to combat that, I've always sort of stuck to the view of, I'm buying this. It doesn't mean I will buy it. It means that if it gives me the chance, I'll have a go. And if it doesn't, well, I'm just going to keep watching it fall, because the further it goes, the better that buy is going to get at some point. At some point, it's going to rally back. It's going to stop out a ton of people who are short, because what you've got now is loads and loads of people who are short with their stops all the way up there. And as it starts to go up, it's just going to stop. Not in one, but it will just steadily start stopping people out all the way up. You could get that on a shorter time frame. You probably got it slightly today in euro. Not convincingly. In fact, euro, if you're looking for a reversal, I think does actually look quite good for it now. Well, it's already on its way. But the fact that, let's get that up, so it's a bit easier to see the day. You've had this run to the downside, it's done this little kind of consolidation pattern, tried it down, failed, and then gone back up through there. So through that sort of 0793, that looks pretty good for a reverse. It's kind of, you can almost call it your little sort of block reverse here, where you've done this sort of sideways range. Once it goes above it, I'm always looking at any kind of pullback to it, as long as it doesn't fall in, is good to go up. The question for the rest of the day now is how far it goes. Is that it? And it's a short-term bounce. If it gets through 0804, then there's not really much to stop you thinking 16, whatever that little area here, 16, 17 would be your next target. At the moment, currencies are not exactly moving quickly, so it's not a thriller of a trade. It could end up taking you until the European close to extract maybe 20 ticks, and that's going to be about it. But technically, it makes sense. Technically, it stacks up. That's perhaps a trade to go and take, and that's where you kind of, you know, even on a short time frame, if my view is generally this is a buy, well, little trades like that are not going to do loads for you, but it's just one more little trade that you can take, and at least you're doing it with a degree of bias, basically. And as much as everyone says, you never have a bias, don't predict. You don't want to predict, but you want to at least have a general idea of what you want to do.
Ones are in your favour, with a high probability.
Yeah, that's essentially the way I try and view it. Like, it's clearly going down, but the probability of getting a move that I can be confident will happen, in my view here, is to the upside. You know, for this to go again towards the downside, how confident am I of that happening? And also you have to factor in, not just are you confident it's going to happen, it's a question of, are you confident you can get in with a degree of risk, as in manage your risk on that. Yeah, this is a classic example of one where it drifts down, it drifts down, it drifts down. If you sell that somewhere in the middle there, this is a 5-minute chart, bear in mind. 5 minutes later, it's still at your price. 10 minutes later, it's a tick further on side, and 15 minutes later, it's back at your price. Whether you think it's going down or not, how much do you really believe it is? And you're going to talk yourself out of it. And then it's down here, and you're thinking, oh, maybe I should sell it, and you don't, and it does that, and now it's down here and you're selling it. You're just getting yourself to a point, you're just constantly kind of selling because of what's just happened. So even if you can sell, if you do sell it down here, these are the worst ones. You sell it there because it suddenly picks up a bit of pace. All the pace dies, and then you look at it and think, I don't know where my stop is on this. And then you think, actually, my stop's probably somewhere up here. And now you don't like it. So you get out whilst you've got something. So all the way down, you could be selling this all the way down, and you end up looking at the end of the day and you're like flat, or you're a little bit up, a little bit down.
I've made some notes, but we'll talk after the lecture.
Well, feel free to ask questions if you got them. I'm sure there's somebody else wondering as well.
Well, I've pretty much said, so you stay with the momentum until something changes, i.e. the volatility or the pace. So with this move here, you've got the daily break, so you won't be focused on the downside until you get that change, which was that day where you had the large expansion and the...
Yeah.
And then that tells you something's changed. So you might not want to still, you're not going long, but it's just letting you know that, you know, something's changed. So.
Yeah, that's where I try and look at it, that in terms of your changing of your mind doesn't change, right, if I don't want to be long, I must want to be short, or the other way around. Generally, you will move through a phase of, well, if I don't want to be short, I want to find out, do I want to be short again, or do I now want to be long? And sort of view it like that. The markets will go through phases of directional, neutral direction, and the second direction doesn't have to be the same as the first. View it more like that. If you ever get to a point where you think it's gone as far as it should in your eyes, well, that suggests that you don't know where it's going to go next, because if you thought it was going further, you'd still be in, and if you thought it was going back up, you'd now be long. So you then have to go, well, I need to wait, I need more information, and then I'll be able to make a decision. And once you get that information, then you can make that decision. Like I say, from my perspective, unless you believe this is going down through these lows reasonably soon, I find it really hard to see why you really think the euro's a sell here. At least not without a bounce. I'd be thinking if it is going to go down here, I'd want to see it do that. Markets don't straight line. You look at all of the rest of these moves, it will have some degree of pullback in it. You look even at something like this, it's up, down, up, down. It has pullback to this, is pretty much just straight lined. It's due a pullback. It's a horrible phrase because you could still be saying that down here. Oh, it's due a pullback. Yes, but I don't want to sell it because I think the pullback is quite possible. I don't know where that's going to come. What I don't want to be doing is selling it just as it goes straight the way back up.
Also, Richard, with the market profile, I think it was on the next chart of the euro. Next one.
No, it's been one.
Was it the one? You said it would
no, it's a short. So this is the one I got up just now. Yeah.
You said it would trade back up because it's a dense profile there. Is it going to take time to trade through all that? It's not going to be like a fast move through that. It's going to be slow.
These are that's a tricky one because it could be either, as in if you think it's going to fill this out, right? I.e. trade more spot time in here. It can do that in a number of ways. It could trade all the way up and then back, or well, it could. Let's say so. It's going to move from here to here. It could do it like that and fill that out. It could do that.
Kind of grind through it. Won't just because it's a dense.
But it doesn't have to. It could just straight line it and then fill out from the top back down, or it could just drift it all the way up. Whichever way you look at it, if your assumption is it's going to fill this area in, it's going to have to get to the top somehow and then roll back down. It's just the way in which it does that. And so you have to kind of look at it and go, well, if I think this is going to happen, get in the trade with an acceptance that this might be really boring and you might still be in the trade in 5 hours time. You might be out of it in 15 minutes, job done, and trying to play the short as well. You don't really know, particularly when it's within the day. If this was the next day and you were opening, say, down here, trading back into it, I'd expect it to go through quick. The fact that it's the same day, well, this suggests that everyone's quite happy trading here. So why is anybody suddenly going to rush to buy through this area? Probably not. So I'd be more inclined to look for something like this, a bit of a sort of steady, drifty type move. But the thing you've got to sort of look at, if you forget about what it might do and how it might do it, what you're basically still looking for is it's going to go from here to here. And as long as it doesn't go here, you're fine to be long on that. The idea is still good. It's just the way it's going to do it isn't as clear as some trades. It's an ugly one, basically. Yeah, my preferred trades are ones that I can be confident of how it's going to do it as well. Something like that, I'm a little bit...
You can't manage your risk.
Well, you can manage your risk perfectly well. You put your stop in and you leave it. So the risk is managed. All of that side's managed. It's just the ability to go, I'm right, I've definitely got this right, isn't really there until it's done it. And then you're like, oh, well, I was right. So it's a trusting of the charts type trade, whereas there's going to be other trades like that oil one yesterday, which I think I've got an oil chart. Yeah, that one yesterday. When that broke towards the upside, you had an expectation it was going to stop people out, it was going to do it quickly. So on that basis, it was a much easier one that as soon as it started to move quick, you could get in, you were shown you were right, you could add on if you were quick and not try and do it with your finger. That's a much nicer trade because it does what you think it's going to do. Also, if it didn't do that, you know you're wrong quite quickly. With that euro one there, if it's still dribbling up in the mid-teens in an hour's time, well, you're just about right. And that's it, but you're not going to get anything along the way that really says to you you're right. certainly for me, makes a trade hard. Because as soon as something doesn't show you you're right, you start questioning whether you are right.
That's when mistakes happen.
Sorry?
That's when mistakes happen, yeah.
It is. You have to look at it, and it's more something where you have to look at it from the perspective of, is there anything to show me I'm wrong? You don't need things to constantly show you're right, you just need things to not show you you're wrong, because if it's going in that direction, you're fine. I always think of it like if you're driving down a motorway to somewhere, if you're driving from here to Cardiff, which is about 100 miles west, unless the road is shut, you're still going to get there. You might not get there as quick as you thought, but you'll still get there if you stay on the motorway. You might hit some roadworks, there might be a crash, whatever. Unless the road gets shut, you're still going to get there. So you don't need more reason to believe you will. You know that, and the map's told you that. That's what the chart's for. It's told you where to go, you're doing that, you will get there. Unless, of course, they shut the road and turn you backwards. But that doesn't often happen. Right, the other one of those that the reason I put this one up was it was a discussion that I had with one of the guys upstairs yesterday. And he was asking about, and this will come up a little bit more next week, so I've not put the profile on it, about whether this was an elastic band trade, as I would call it. The idea of an elastic band trade is a market that has traded very much in one area for a long period of time. It's clearly happy there. If it moves quickly away from that zone, it's not likely to stay there, and it's a much easier trade to play back. So situations like that make levels a much better trade, as in you can have more conviction on a level. The hard thing with levels is, well, it's just a line on a chart. And yes, other people probably see the same points, but if you just trade off a level, you're guessing that other people might turn up at the same time. They might not. You could get, I got a little level at 13, which was the sort of pullback high before the breakout, support at the end of the day here, sort of cap on the lows on the previous day. It's not the strongest of levels, but it was just inside the previous day's range. You've moved up there. We'd spent all morning on this day just trading down in this area. That to me is a day that doesn't really want to do anything. You've got the same thing again in the bund today, where if you go look at what it's done, it has traded up and down in about a 25, 30 tick range, from like the low 70s to the mid 90s, something like that. That's all it wants to do. So when you look at it and it goes whizzing out of the range towards the upside, there's not much reason for it to do that. And anybody, unless there's anything fundamentally changing, why have all the people who had all day long to buy it down here suddenly decided they want to buy it 20 ticks higher? There's no real reason. So it makes this level much, much stronger. It's also a gap close, which again makes that quite a nice trade. There was a question on this yesterday. We were talking about what do you do if you've got a range of prices? Because this would be a good example of that, where you've got gap close, which came in at, so that level's 06. And then you have to a degree, look and go, even if 13 is not the strongest of levels, and I don't think it is. If you sell 06, where's your stop going to go? You've got to try and find somewhere to put a stop. So your stop in this instance, I would say, has got to go beyond 13. Possibly even if you look at that little low there, beyond 17. You can go, okay, well, I'm going to put my stop at 18s, let's say. So you've kind of established a little range anyway. One approach to this is rather than just selling 06, you either wait for it to get up there and then see where you can sell, or you sell 06 and then you also sell 13 and you maybe sell something in between that as well, so that you're spreading your risk out and you're also getting yourself a better price. Yeah, if you can sell 6, 10 and 13, you've got an average price of about 10, which is far better than just selling it all at 6. Which also means if you do lose on it, you're losing from an average of 10, not an average of 6. So you lose less as well. So that's one approach to it. The other approach is you say to yourself, well, let's see it get up there and then I'll decide what I want to do. It goes straight up. So if you're watching that on a ladder, it's going to do it quite quickly just based on that candle, based on the volume on that candle. Suggests to me that's done it pretty fast. So I don't want to just sell 06. If you can see that zipping up towards it, you don't stand in front of it, let it go up. If it struggles after that, then you can sell it. So now 13 has become a way stronger level. It's already looking stretched. It's a little bit of a level, it's not a great one, but it's good enough now because it already looks stretched. And it's in an area that you want to sell. You try and sell the gap close. If you do it that way and you sell 13, which Harry Hindsight gets it right every time, it looks wonderful. It's an absolute perfect trade. Sell 13s, it's easy. It's not, but if you sold 13s, and this is the reality of a trade like this, you've then also got to be aware of what it's got to do next and what you're trying to achieve on the trade. If you're just trying to take this as a quick scalp reaction type move, it whizzes up, it stalls, it rolls back, then when it comes back to 06 down here, you get out of it. And you go, right, I've got my reaction, tick, back, and that's it. The downside of doing that is if it does just go straight down, you've missed the trade. But you have to then be accepting that if you're gonna sell 13 and your stop is at 18, it could do this and come straight back and then go down. So it's a lot of the time, it's about what you're trying to achieve on the trade. For a real short time perspective, you might look at that and go, well, it's flicked up, it pulls back, it stalls, get out. For an hourly perspective, I don't see any reason to not think it's going to go back into that previous range. So you're looking for a target at least 94, which was these lows. It's basically the peak of what it had done in the morning. You're going at least back to 94 and possibly beyond. Possibly, I always look at a trade, if I think it's a balanced day, I'd always play it to the middle. Never play it to the other side, because like this, they don't always go all the way to the other side. Play it to the middle, you can be confident of getting the middle. So then you can work that out and go, okay, roughly 50 ticks wide range, 25 ticks off the top takes you to just below 90. That would be your target. This also illustrates why you should never move your stop to a scratch just because you're on side. People do this so often. They get a trade like this, they sell 13, they've got really nice and lucky, got the high, it goes 4, 13, they get out and it drops. And then what they end up doing is deciding that somehow they've now got a better idea and they're going to try and buy it, and it falls and they lose money, or they go, oh no, it's all gone wrong, sell it, it's definitely going down now, and it bounces and they lose money. If you've got a good position, don't give it up. Definitely don't give it up for the same price you got in at. Like if you thought it was a good sell, why in the world do you now think it's a buy when it goes back to that point? It's never a buy, which is what you're doing. If you stop out there, you're buying. There's no reason to do it.
Is there something that can indicate to us, Richard, that we should be buying the low, where we should be waiting for the pullback? Is it like a day type or something? Or
day type's really important on that. Something like this one, like I say, if you're in a market that is very, very balanced looking, anything that extends beyond the top of the range on the current day, if it runs up to a level, the level's probably a decent sell. Likewise, if it goes down to a level, it's a decent buy.
Play the extremes.
Play the extremes, yeah. If this is directional, like this one, that had shown you pretty early on, it looked quite directional. There's no way I want to buy anything on the way down. Even though you sort of go, whoa, that's gone a long way, it's gone a long way. It might have gone a long way, but it's showing you it wants to go down. If you're buying, make sure you're buying because you're covering a short. You don't really want to be buying that for a bounce. Yes, you might get a reaction, you get a flick up, whatever you get on it. You're not going to get anything massive on this. So yeah, context really, really matters. I think today in the Bund is probably another good example of it now. If you go back up to 06 or 13 today, unless there's some really, really clear news behind it, I think it's probably a good sell because we're doing exactly the same again. On the point of it getting back below 06 as well, once it's done that and it actually drops to 04, this is where you bring your short time frame chart out. 04 is a good place to sell now. You could sell 04, you could sell 06, you could also put your stop at 14 now and just put it over the high. You don't need to go so high because you've just been shown that that's where you've run out of buyers, so you don't need to keep on going. So yeah, that's how I'd look at that. So you get two bites of the cherry. Same principle though, if you've sold it there and you're looking for it to go to the low 90s, mid 80s, don't get out when it comes back, because that's, if you didn't sell it, you'd be selling it. So if it comes back, if anything, sell more. Unless it drives straight back through you, sell more.
Like we said before, unless it shows you a change in the momentum, or keep selling.
Yeah, exactly. There's nothing saying you're wrong there. Oil, incidentally, now is 320. It's on its way.
It's coming into the low.
Yeah, the hard bit with a market that's coming into the low,
There's a lot of bids there now, so
it's not even that, it's the fact of, yes, it's going into the low, but it's not the low. So if you buy it here, you could.
maybe see a liquidity run first.
Your stop's got to be below 57, in my view, if you're buying it there. Which, looking at the type of day it is, I don't think that's necessarily a problem. This is an example of, oops. These are days that people don't like because what you're doing is you're playing the probability versus the payout. You're going to take a 15 tick loser if this goes wrong. The probability of it going wrong, I think, is reasonably low, but your payout isn't going to be much. You're probably getting about a 10 tick winner. So you've then got to weigh up that if you do this all the time, you'll probably be able to make some money out of it. The time that it goes wrong on that day, it's going to hurt. And you have to do it with a reasonable amount of size to make it worth it. If you're going to take 10 ticks out of the bund, you've got to do it on at least 5 lots to make it worth doing that. If that goes wrong, that's going to cost you €750. It probably won't, but one day it will. And so that's the bit. That's why a lot of people don't like doing these trades, because there's nothing that tells you you're wrong. You have a go at buying 70, you might as well have a go at buying 60, and then you're getting yourself to the point of, well, if this does go wrong, it's really going to hurt, and you're not going to get a chance to make it back. That's why people don't like them.
I didn't even look at the chart, I was just seeing it.
Yeah, you can just look at it straight off a ladder and go, well, you can see where it is. It's down towards the low. I think it's the same game as earlier. For anyone, we were watching it in here, for those of you online. This looks like somebody spoofing. All of these thousands here, they're manipulating the price.
Especially on the day type we're having, it's a high probability people will be doing that, because the day type has just been in this range.
It's more about just a general low volatility environment that you get that, less so than the day type. You could get these types of things on trending days. This person or group of people or whoever they are have been doing this for about a week. So they've been doing it even on the trendy days. You just notice that they'll spoof it and then they'll give it up quite quickly. But it's been happening. As soon as it gets a little bit quiet, even on a trendy day like this, goes through phases of being quiet and you'll get this messing it around type thing. It basically muddies the water a lot of the time. I think broadly this will go back up. But if they manipulate it down and drag it a few more ticks, you start getting down to that 57 area, then people start getting pushed into a little bit of a liquidation. So it's ugly, basically. But if they start spoofing the offer, that gives you the chance to buy it.
Looks interesting, can't wait to get involved.
There you go, well have a go, buy it.
Oh, I need to bring up the charts and everything.
Well, there you go, there's the chart. The low's 58 from yesterday. So if you want to do it, you can buy it, but you stop below 58 and see if it rolls back up into the range. If that's your view on it.
Would you say, Richard, though, looking at that's a flag at the bottom? It's not like, that's not really, as it's saying,
This-
I think it's a level hard and I'm going to find initiative buying. It's kind of like pushing lower. Unless somebody that we don't, could or could not, steps up massively as it drops to that number and decides to join back up. Would you say it's more probable you think it will tick below it than it would stay there?
Well, this is the thing with technical analysis. If you fancy this to go down, that's a flag all day long, sell it. If you don't really think it's going anywhere, you just buy the bottom of the range. And that's what makes a market, right?
Yeah.
There are some people who are thinking all day long this is about to go.
Yeah.
Personal view is if it was going to go, it opened down here and it didn't. It tried to go down there again and it didn't. If you really wanted to sell the bund today, why have you waited so long? Get on with it. And so for me, I completely agree. You could definitely draw that as a flag in some way. Oops. And you can fiddle around with how precisely you want to draw it. Oops. Oh, go away, it would be there. It's a flag.
And how, just one other supplementary question. And in terms of the market, with some markets, this is, don't know whether this is an assumption whether you'd agree, but some markets tend to have set up to catch traders more than others, right? Some tend to have, they set up for one side, they move and they fake it and then they go to the other side to catch the core traders. Looking at that, would you say there are people today caught short from having shorted this down there as we've topped out of those candles to the right, the three sets of highs there, and therefore the bund is the type of market that can drop below and then rip to the other side, or it's not really in bund's nature to do that?
I don't know. I've never really been of the view that any market does it more than another. Otherwise, I'd feel that I kind of know which one that is.
Yeah.
I think you always notice when it happens to you. You were selling it here thinking it's going to roll down, it does that and then goes down. I'm trying to think if there is anything that I'd say does that more frequently. I'm not too sure on it.
Okay.
The bit that puts me off thinking this is going to go down today is just the way it's trading, which I know is a vagary, but the fact that it's spent all day just dribbling around doesn't exactly suggest the market has got it's not the energy in it to go, which makes me think this isn't the one. If you're going to sell it, what I'd be looking for on a trade like this is rather than play the flag, because I feel the flag is more a feature of almost coincidence of where these lows happen to form. I'd prefer to play the lowest one, below the lowest low above the actual low, if you will, because you've got through these three, you're through 68, whoops, you're through 68, there's only one place left to go. So if anyone's then going to go, well, let's say if you were long and you feared getting stopped out, you can either leave your stop there or you can give it up in the low 60s so that you don't get the big stop. And it might bring people in to sell. Whereas where the flag break is, you're selling right in the middle of the range, which is, well, where people have been selling all day, as well as where people have been buying all day. Yeah. So it's one of those that you could sell it there and get it right, but I wouldn't have any confidence that that would play out over the long run. So it's the joy of technical analysis. If you like the idea, you can definitely find a way of playing it. And whilst that sounds like it discredits technical analysis, I think part of it is a job of going, well, I think broadly this is going down, how can I play it? Rather than sort of going, well, you can curve fit anything, you absolutely can. But if you want to be short, that provides you an opportunity to be short. The other way to try and be short was, it sounds easy now. I say try and sell the highs. I'd probably still be looking for 06s this morning. So there's no way I'd be selling here. I'd be looking for the 06s, it never quite gets there, in which case if you really want to sell it, you sell it through the low. It's just whether it's got the legs for it, which I'm not convinced it does. Just based on the way it's traded all day long, it's been really slow. Lagarde said nothing either, which doesn't help.
She's not lying, is she? I thought it was a guy, Lagarde.
Lagarde? No, Lagarde is a lady. I have opinion.
She's playing for 3, but got minutes left.
Well, then it may have come out, whatever she said, and nothing's come of it. Right, this is the oil one that I put up earlier. Obviously, we're in a different place now. But part of the reasons for sort of putting it up was partly along that line of technical analysis is there to help you do something you want to do. So take, for example, oil. I think the hourly we talked about earlier sets up quite clearly. If it gets below the previous days or the previous day's cash session highs, which are all around about 40, if it gets below there, it also happens to break this trend. That seems a target, that seems a target, and then onwards. That seems quite realistic. If it stays above there, then you're looking for the move back up to there. And basically a repeat of yesterday, 96, and then that's 20, I believe. And then onwards from there. That's the way that I'd be trying to look at that. What you've then got to do is go, well, okay, for an hourly, I know what I think is going to happen. I know my levels. I know where I think it's going to go, what I want to do. Then you get onto a short time frame and go, well, what can I do about it? How can I actually take this trade on? I'd struggle to call that a flag. You could try if you want, but the fact it's gone down, bounced, 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 it's not really a flag. If you put it down on a 1 minute, it just looks like a messy chop. Put it on a 5 minute, just about, maybe it's a flag if you really want it to be. I wouldn't call it. So you're then looking at going, well, I don't really have a trade on the downside technically, apart from selling it through the low, or selling it on the pullback towards these highs, which are all around about 60-ish to 67. So you've got that zone. If you want to sell, they're your two options to sell. If you want to buy, then my view was 40 was the place to buy, or you buy the break above 67. So what I'm trying to do is take the short time frame and just set up which one, where I want to take the trade. And the other part of that is you've got to decide for yourself which one you want to do. What I don't want to be doing is selling 60 because I think it's going down, watching it go to 40 and going, oh, I think it's a buy actually, and buying 40, and then it goes 40 and up, and then you don't know which, or you try and buy 40 and it doesn't, you're now long 40 and it's going down. I don't really want that. So you have to decide which way you think it's going to go hourly. Then you have to decide what you want to do about it. That's the way I try and look at it. So from my perspective, 40 was kind of your line to make the decision, which therefore means that you are essentially limited in places to execute, i.e. selling through the low or buying through the high, but at least you've then given yourself a plan. There's no way you're selling 60. There's no way you're buying 17. It's either got to 17, in which case it must have broke 40, or it's got to 60. As long as it's not broken 40, I'd be willing to play that. Even if it has actually, if it's done that, I still think that's a reasonable shot. So you've kind of planned out what you want to do. It's then just a case of when it gets to either of those points, you do it. What I don't want to do is get there and go, ooh, maybe it's a sell, maybe it's a buy. It's a buy. and find a way to do it. And when I say find a way to do it, what I mean by that is get your ladder up. It also doesn't mean that it won't have produced you a little bit of a pattern to trade anyway. You know, in this instance, on the open, it gets up through 60. So as soon as it's done that, it's all good. It's all go to the upside. So if you liked the idea of if it stays above 40, it's a buy, well, there's your buy. Play it on the break of the high. You then got this kind of flag type pattern if you want. So if you're not in or you want to add on, you've got this kind of little flag that you then play the break here and then try and run that to the 20s, which is where you end up getting to. And then, you know, once it's up there, like I said, that was the point for me where if it's going to get stuck, it could. It was that little low there. That's where you kind of scale out, I would say. Yes, you could say, well, you're up now, stay in and try and run it all the way up. But
simply something like that.
Yeah.
I took the back into the range trade.
Yeah.
And I was thinking about maybe trying to run it up towards that area.
Towards the 70s.
Yeah, I took some off at 20.
I think that's the way I kind of look at it. I think as long as it stays above 20, and if you look at it saying short time frame now, go on, switch back. Now you could almost go, well, if you want to run the rest of it and keep your stop.
What, beneath 10 somewhere?
Yeah, beneath that sort of initial high. As long as it stays above there, I think it's just as likely to go to 70 as it is to anywhere else. And so we'll do it like that. But yeah, I quite like you've got a clear place for it to go to.
Well, yesterday, today's come down, come back, and just maybe expecting a repeat.
Yeah, I think so.
Yeah.
You're inside of yesterday's value. It's right where anybody who does want to buy it has surely now got enough information to say it's still a buy than they had before. And anyone who was selling it surely's got to think they're wrong. So yeah, I think it's reasonable to go there. The way it's sort of playing out looks good for it as well. Like it's moving value up. It's all there. It's just a case of getting on with it. But these are the times where if it's going to do it, it's probably going to take a bit more time now. It's done the rush and the sort of the initial move. It's now a question of the next leg. Just trying to see where's the. You still got. Oh, it's just broken it actually from a profile perspective. I know we're not on profile at the minute, but from a profile perspective. You're just getting above the initial balance high. So again, as long as it stays above that IB high, if you find any kind of short time frame pattern there, you could use that to play it up for the gap close as well. So it's kind of, it's all there. It's just a case of if
it comes off.
Yeah, exactly, yeah. And if you're not in, whether you can find yourself an entry point. But that's where, you know, I'd get the chart out, go and try and find some pattern. The whole point of the sort of short time frame patterns is to be able to say, well, I can now define a stop. Otherwise, you can buy it here if you want, but where's your stop? You're kind of just scratching around going, well, I don't need a stop, it's going down.
We're not here to gamble.
Yeah.
We go to casino for that one.
Exactly. Yeah, you could now start, sort of looking at 10s and 06s. If you played the breakout, you could have stuck your stop above 34. You're now trading back down to 24, 20. So it's once again, it's struggled it up there, which does suggest that, if it's going to go, it's going to take a bit longer to do this and then finally go. So it's then really a question of how much do you fancy 70s? Because you could see it back down towards sort of 10 before it goes. And if you're not comfortable with seeing that, then you might be better to go, well, it's failed to break 34. Maybe I'm better to give it up now. It's all a perspective thing of where do you think it's going to go, and are you willing to accept that pullback in P&L now that you've seen it on that bigger number, which is not a trap you want to fall into. Try not to see your P&L as lost money. If you're still in the trade, you haven't lost anything until you get out, and you still make more money than you had before. So there you go. Right. The S&P incidentally has broken that. No, it hasn't. I've still got that on it. It might have done actually.
Nasdaq had some decent moves today.
Yeah, on the back of the ARM thing, ARM and Qualcomm. Yeah, I'd expect Nasdaq to be a bit weaker. It is a bit. It's still, Nasdaq's really nice clear level there. You can see how much I chart Nasdaq.
Yeah.
Distinct lack of levels, but yeah, I think that's going to be a big deal now for the Nasdaq.
Yeah, it could break through. That's what I'm watching.
That's what I think. I think if that breaks,
I took a short earlier.
You've got all of these people to get pushed out, and then possibly down here.
Yeah.
Yeah. Where are you short from?
527.
Oh, nice. So you're up here somewhere.
Yeah.
Excellent. What you're going to do if this doesn't break, or how far are you going to have it come back?
So I'm out of
Oh, you're out. Oh, right, fair
Yeah.
enough. Oh, I was just, I was wondering, I was sort of managing it. Oh, right, down to here.
Yeah.
Yeah, fair enough then. Even if you were aiming for that and thinking there may be more, the fact that it's bounced back on it, you have to kind of go, well, maybe that's it then now. But yeah, I think the Nasdaq and the S&P are both the same in that you've done all of this just sideways range. It's got to break that somehow. It's either going to go out the top or out the bottom, and when it does, someone in there is wrong, or a large number of people are wrong. That's 4 days of just the same range.
Yeah.
And that's the kind of thing with the supports and resistances. Those two, the high and the low of that, have just become very significant. Also, their levels I definitely wouldn't want to buy. I know it's bounced off it today. I wouldn't want to buy that, because next time it goes there, how many more people are going to buy it? I wouldn't want to. Does mean that you quite possibly are going to sell the low and take a loss, buy the high and take a loss, but the time it breaks, you should do it quick until I really start to get on with it. You're seeing the same again in the S&P today. It just doesn't quite want to do it. Same game down there. And this is why I'm not a big fan of the sort of the hourly trend lines.
Question for you, Richard. On,
Go for it.
Three possible answers I can think of. You can make think of the fourth. The context is about trend lines and what they actually mean.
Yeah.
So, the candles basically represent the ebb and flow of order flow, right? Which you can see on the ladder, or you can see represented in a chart, right, where the orders, the waves are moving backwards and forwards, right?
Yes.
Do you think that it's just a mathematical coincidence that the trend lines happen to line up to where the order flow highs and lows are across there? Do you think there's some relationship, or don't you actually care? It's just a tradable pattern, and that's all you really
One ultimate, yeah, it's tradable, and so therefore that's all you really care about. I think there's a kind of self-fulfilling element of these types of things where people look to draw a pattern or a trend or something.
Yeah.
So people draw it. I'm definitely not the only person who's got that trend drawn on, and there's going to be other people with slight variations around that that are all looking at it in the same way. So I think they do line up in that sense. Equally though, and this is where I can't think of quite the word, you could look at that and go, oh look, the trend's worked. But has that worked as a trend, or has it just worked because people have tried to buy that low kind of thing? So it's always quite easy to sort of fit it and go, well, it fits the idea of buy the trend line, but...
You could argue also that, because conversely you could also argue there's a line to say, well actually it's the support resistance because it's the upper end of the ebb and flow of order flow on that side of the chart. And
yeah.
I guess doesn't really, I suppose my take is the right take that the reason doesn't really matter. What matters is there a trade logic behind why it's working, and a contextual alignment to me that it's going to actually have context in that moment to be something you can trade as opposed to one that you stand by.
I would look at it more like that it's about can you turn this into an actionable trade, and also at the same time be able to turn it into something that you could say, well, I believe I'm wrong if this happens, in which case now you can action it and also be clear on where you're wrong, at least in the time frame that you're looking at.
Yeah. Okay.
But yeah, ultimately for me, like, context is the real sort of key to all of it. Doing it in this sort of big squeeze up, which is where the trends give a kind of sense of compression. Yeah, you're not going to be able to get this sort of pennant if the market's not getting increasingly sort of compressed into an area. What I'll perhaps talk about tomorrow is sort of zoning things. So this is the sort of main area for me, this zone from 44 to 68. 68, you could argue, starting to change in its significance, and it could end up being sort of 50 depending upon what today does. But this kind of zone seems to be the point where it gets stuck every single time. It was the peak of this initial move up, and then it gets stuck in there again. It won't fall into it. That's the bit that matters. So if it gets through this or gets into this zone again, the way it comes out is going to be key. I prefer to look at it in kind of like little sort of zones, if you will. You've got that, then you've got this broader zone of which anything anywhere in here, so basically 68 up to 15, it could go anywhere, which then what it does for you is it goes, well, get onto a shorter time frame chart, trade shorter time frame patterns. You might be able to play a short-term buy, a short-term sell, those types of things, but don't have a major view in that sort of 40 or 50 tick range, because it's unlikely you're going to get it right over the sort of the bigger move.
And in this chart specifically, would you overlay the context to say, is it 58.50 is yours, that trend line, is that right? The horizontal support line.
That's
where you just were.
58.68.
On the bottom of all that support where you just have that line.
Yeah.
It's about, I would say 5.950, somewhere in that region.
Down here.
Just a bit lower on that. Yeah, just under there.
Yeah.
Would you say that actually now the market's been down there, it's kind of used up the buying liquidity that's there? So if it is going to come back, the probability it's going to have more energy to unless something suddenly the psychology changes and hey, we're off to the moon.
Yeah.
The probability that having a bounce and looking to go long is now lower, and you're looking to see what's happening to see if there's a probability of the break and reversing of that level.
So I get.
How do you view the consumption of liquidity from left and right along that zone?
I get what you mean. So yeah, I see what you mean. That people have been buying it here, they bought it here.
Yeah.
How many more people are there to buy?
Yeah,
I agree with that. That's where I don't worry so much about the probability of which way it's going to go.
Yeah.
It's more about the way it'll do it. It's obviously an upward trending market. We know it's done it all year. So my sort of assumption is the people buying it up here, there's more people who are probably buying it to try and hold for the next leg of a move. There's people selling it up here are probably more likely people selling taking profit on balance. Therefore, if it starts to go down, I would expect the drop to be faster. It may be shorter lived, but I'd expect it to be quite quick as...
Still got people coming in underneath the levels below to buy it.
Yeah, one that, and also you've got lots of people who are buying it very close to the highs. If they don't get the next leg, because they've all just been sitting down here mopping it up, buying it, if they don't get that next leg, they're in trouble and they'll give it up and then try again. Whereas for people to start buying it up here, like you said, if they're sitting down buying it in here, the only point that people are really going to start buying it through 59.15, 59.20 is when they have a belief that they're not going to get filled by waiting anymore. So you've got this kind of what I'd view as sort of passive buying. People are just trying to buy any slight pullback. So the only way that someone buying pullbacks is going to pay higher prices is it's got to get up there and they've got to believe they're not going to get the pullback this time. Whereas people buying on a pullback here, as soon as it gets through this range, are immediately in trouble and they're then vulnerable. I don't think there's that many people who are selling this in a major way that, as in you've got enough people who will still dive in for the sell on a breakdown compared to the people rushing to buy.
Would you also overlay like where the S&P is at the moment, all-time highs, but given the fact we're coming into the elections, nobody actually knows whether this is the next level of the new bull trend, and therefore it's not like it's just going to get snapped up hard. Maybe if the broader context, bigger picture context was different, say post-election real bullish, those levels, I guess the context changes to then the potential dynamics of people coming back into those levels to step up, or do you not give any kind of credence to that?
I try not to overlay too much of, particularly something like an election where the outcome of the election is uncertain for one. The impact on the market of either outcome I don't think is massively certain. And of either outcome, either winner, the market impact is contingent on their the split between the House and the Senate as well. So there's so many moving potential scenarios that it's very hard to sort of suggest that the market is pricing one or another or any of those. But I think it's almost more, I would view it as, once the election's out of the way, the S&P will do whatever it wanted to do anyway. This is just creating a bit of a block. Get that done, and then we can get on with it. If it wants to rally and hit 6,000 by the end of the year, I don't think it matters who wins the election. It will do it.
Okay. Thank you.
If it doesn't, then everyone will go, oh, well, it didn't because Trump won and he's bad for sentiment. Oh, he didn't because Kamala Harris won and she's bad for companies and the economy. So whichever way you cut it, it's easy to explain why whoever wins is the reason for it going up or going down. It's a really easy one. It'd be so great to be a journalist. It's so easy. Oh, it's gone down. Yeah, Trump. Oh, it's gone up. Trump's not in.
That's what you see is the news gives meaning to it's so easy to give any kind of contextual meaning to a move the market. Today the market went up this week. Like, talk to somebody, they'll give you an opinion, and then that becomes the headline as the market went up today in the S&P because of this reason or went down. And actually, it could be a whole multitude of things. Could be auction dynamics. Could be anything.
Absolutely. I think it's really, really easy to explain anything away. Yeah, oil goes up today because of the data. Don't even know what the data is yet, but I could write that piece. Oil goes up today because of lower inventories.
You could write those down as well. Just wait.
Oil goes up today because market gets over lower inventories.
Yeah.
Market doesn't pay too much attention of lower inventories, so oil goes up. Whichever way you cut it, whatever the data is, you could explain why that still means oil goes up or down.
I guess that's why in some ways, like your opinion about what market does, why it doesn't really matter at all, does it? Because you could assign any reasonable meaning to what it does or not.
I think
there's
so.
some fundamental stuff, right? But beyond that, obviously it's done this today because of it's not really.
No, with any kind of news, the only way that I could, or that I would feel confident say it did this because of the news, is if you can point precisely at a point on a chart, likely on a 1 minute chart, and go, that was the news, and that's what it did.
Yeah.
Yes, the news made that move happen. Yeah, that one was payrolls, I think.
Yeah.
Yeah. No, that wasn't payrolls. That was the day after CPI. Payrolls was the week before.
On the left, isn't it?
Yeah, but you can at least go, that news happened, market did that, therefore the news created the move. But outside of that, I think it's just, you can explain away anything. But yeah, I would still look at this from the perspective of, irrespective of any news that happens, until the S&P gets below 44 or above 15, there is no direction in it broadly. It's just going to wash up and down. You do have that oil data in a moment. But this is where particularly with oil data of late, I might just run it until we get to the oil data. Particularly with oil data of late, it's not having the greatest of impacts. So if I'm looking at oil and I'm of the view this is going up because, well, let's face it, that's what it's told us already, I'd much more be looking at this from the perspective of almost going into the data with the view of whatever the data is, oil's a buy. It either goes down and you buy the whip down and play it back, or it goes up and you buy the break of the high, because it's already told you where it wants to go, unless this data massively changes that, i.e.
If you've got position, would you run it into the data?
depends where I am.
15s.
Possibly. I think the problem is that it's probably got enough, it could certainly put you offside, and it's then a case of, well, how far are you willing to go? Yeah, really difficult that. I always find that one in terms of, do you stay in, don't you, on data, really tricky. I guess if you're looking at it thinking, well, you're long at 15, you're looking for 70, your probable risk on this, I don't know, maybe you get stopped out somewhere double O. If you've got a stop in and you get stopped out for 15 ticks, it's still a decent risk reward on a 50-50 bet.
Anyway, so.
Exactly.
Yeah.
So I think there's an element there to go, well, actually, it's probably worth it. What we got? Crude stock exchange, 0.7 million expected. So that's your expectation. So on that basis, I don't know what the API numbers were yesterday. So we'll talk about these things a bit more next time. 1.6 yesterday on the API, i.e. 1.6 higher. So I'd actually look at that number and effectively in my mind say that's about 1.2. So if it comes higher than 1.2 million, my view is more oil down, lower, less oil up. Negative's probably what you really want. You've got 10 seconds now. So we'll see. Ideally, you'd like it somewhere down here. There you go. Well, it's a big build. Got the 06, isn't it? Really nice. That's where you could, like I said, if you wanted to buy it, that was your chance to buy it. Now, whether it stays up is a case of you still got to look and go, well, I can have a stop. I think I'm wrong at X place. Now I'm fine with that.
Yeah.
And that becomes your trade. It is a big build though. That would be the only thing that worried me about this one. It's a lot bigger than I'd expect. Well, not that I'd expect, sorry. A lot bigger than a typical build. So that would perhaps be your reason for this to go wrong, but
Yeah, I've got our stock, yeah.
yeah.
The build is supply and demand, that's more.
So there's more oil gone into storage, or there's more oil been produced this week. So if you've got more oil, more supply of oil, prices should go down. If you have that with less, prices should go up. Usually, like your inventory change, like the headline number, is not likely to go over 10 million either way. Like 10's a real big number. Unless you were during COVID times, and then it would go into whole new worlds of numbers, but all data was irrelevant during COVID. You get like a build of 30 million or something. I can't remember the exact numbers, you could find it. But yeah, that became irrelevant. But yeah, 10 either way is big. but it's still sitting there. It's just a case of is it gonna then reverse at some point? We'll see. I don't think that's a bad position to have. Right, I will wrap it up there. Come back tomorrow. If anyone sees any trades, anything they're looking at pattern-wise that they can think of, any questions on any of the stuff, throw them all in the group. We'll cover all of those tomorrow. We'll go and see how some more of this stuff works out. Right, I'll see you all tomorrow.